Okay. Hello, everybody. Good morning. We have our coffees. We have a Sunday, and we have a beautiful day upon us, and we have some amazing people here. What's going on, guys? The hoodie looks drippy. I made new hoodies. I did, but I think the M is too. Where is it? There it is. I think it's too small. Not sure yet. It's fine. I want a hard work, easy money. Okay, I can make that happen. That's possible. We can do that. Good morning, guys. How are you all? All right, very quickly as a little check, can you guys see the screen? You guys can clearly hear me. Just making sure everything is working here. We are recording. We are looking good. So very quickly, while people shuffle in, as people shuffle in. Oh yeah, thank you very much for the annotations. Disabling those and gonna delete that. There we are. Thank you, sir. So first of all, welcome to webinar 141. I believe that's what we're on right now. It's crazy to think about how, these are not even webinars from the very beginning. There were like 80 webinars before these 141s, this 141st one. But it was before I really refined some elements of the course and started putting out, kind of from a new beginning section, right? So everything that we've been doing here has all been a build upon of everything from the very beginning, which is just crazy to think about. But welcome. If you're brand new, very quickly, you're in the right spot. You should be showing up to these, so you're already doing the right thing. It's important that even if you're new, you show up to these kind of week after week just to see kind of what you're working towards, to see where issues with some people lay, if there are any issues or whatever. Where's the face cam? I think, isn't it on? Yeah, it is on. It is on. so, so yeah, if you're new, it's good that you're here, especially even if you show up and everything that's on my screen kind of looks a little bit like crazy. You've never, there's a lot of stuff for you to look at. That's okay. That's a good starting point. And as I love to say, confusion is king. If you are part of a mentorship, or you are part of any industry in the world, and you're not confused, it usually means that you should be successful in that industry. Otherwise, you know, otherwise everything doesn't make sense. Okay, because you're either confused about what you're doing, and there are things that you need to learn about that confusion, and there's conviction that you need to build right now, so you get better, or you're not confused, which means that, let's put it in the frame of trading. If you're not confused, you should be profitable. Is all it really comes down to. Um, Now, there's difference between confusion of rules and confusion behind actual, let's say, execution of system versus confusion over concepts. Okay, because don't get me wrong, right? If I sat down with any one of you, even if it's your first day today, and I say, okay, guys, here it goes. The market moves in ranges. The ranges are a form of supply and demand. To define a range, you can simply, let's say, put a box around it. Okay, and if we did that all day, you probably have a very decent understanding, even to my effect, to the same level as myself or anyone here that's been here, let's say 3 months, 6 months, of what a range is, or what constitutes a potential range, or how a market moves in ranges, right? But then to take that information that is now fully understood, even though you have no confusion over the concept, may mean that execution of that same concept, or those same concepts, becomes close to impossible, right? A lot of people find themselves in this kind of boat where they're like, listen, everything makes sense, but I'm not understanding how to use it on the market. It's like, well, yeah, of course, right? I've kind of said this a few times, but the concepts we use are teachable to a fourth grader. Anyone here that has a child could teach them the concepts, but understanding the concept does not guarantee the ability to perform it properly. Think to anything in the world. Think to flying a plane, right? I used to use that analogy a lot. Think to building a very nice house or an architecturally sound house that has like some crazy shit involved in it, right? Think about even fighting in a war. Yeah, or basketball, exactly, or the basketball analogy, right? It's if I sat with you and explained to you how basketball works, or if you sat courtside at a basketball game, okay, and you watch the basketball game and you watch this guy just run it back and forth down the you watch these guys run it down back and forth down the court and shoot it in and get it in over and over. And if you watched even a guy take 3-point shots for if you watched one of the best basketballers take 3-point shots for 3 hours, do you understand the concept of what a 3-point shot is? You stand behind the line. You'd probably get that within the first 3 minutes. Stand behind the 3-point line, shoot. How do they shoot? Sometimes it's a little bit different, right? You get used to the shot. But whether you watch that for 3 to 6 hours, whether you got that you even understand what he does in the wrist. You're like, okay, before he shoots, he does a 46-degree angle with the wrist, and as he lets go, he makes sure that it lets go in exactly a V shape with a curve when he shoots. And let's say you analyze for 10 hours straight, got the concept down. Do you think if I gave you that ball, put you behind that 3-point, within, 5 shots, with that same angular of all the craziness, you'd be able to make as many, or even half as many, as the guy that just did it in front of you for the 6 hours that you got to study his amazing concept approach, right? You wouldn't. It's the same thing anywhere. Listen, I can tell you what all the buttons in a little a jet plane do. Okay, like, there's some people that are jet pilots for the Navy or whatever. A jet pilot, Navy or whatever, right? So there's some guys that do this for a living, okay? Okay, and then if we look at the control panel, if I came to you and I said, all right, guys, 6 hours, here we go. And all we do now is we sit here and we go, okay, guys, this is the Phalange 1. This is the Launch 2. This is the A63. This one controls your flaps. If you are dragging in the air, click it, and this flaps will go up, so it'll create less drag. If there's not enough drag, you can increase it. Okay, so let's say I taught you all of this. Do you think if we put you behind one of these and let you fly a mission in fucking Russia or whatever country we're fighting at any given point, you'd be able to perform at a level even 30% as much as the guy that's been doing this for 10 years? Dude, you'd crash this. You probably wouldn't even take off. You'd start, you'd lose your, boom, you're done. Okay? The point is the concept is not the execution whatsoever, and never has been. And if you think it is, right, it's just going to fuck you, of course, as I like to say. I'd fall off the end of the aircraft carrier. Yeah, like Dan would be like, okay, I know all the buttons. As he's climbing up the ladder, he just falls off. He just breaks his leg falling off the ladder to get into the plane. I'd probably do the same thing, right? But the point is the execution is very different from the conceptual, right? So just remember that. That is why it's very good that you're here if you are new, because you're in the right spot for laying the foundation of what everything is, but then at the same time seeing it happen over and over and over again for months, and also being able to execute it yourself. It's literally the definition of, as I kind of showed last week, if you guys remember this, the hard work, easy money. Right, as you start doing your proper collection and stuff, it's going to be a lot of hard work, but it's going to become super, super easy for you over time. Would start World War IV in the air. I can verify this analogy. This was previous life. Yeah, we've all been there too, right? Like I've been there. I've done that. Did you get to 1K? No, nowhere near, dude. We were gone all week long. I had zero time to do anything, honestly. So no. But this week I'll be getting this to 1K. I got a few more in here though. It's not too bad. The system does. It looks way too good. I'm just gonna show this very quickly. Complications with meta. No idea. We'll talk about that in a second. I hate. You guys know this. I don't like to share things until I have a fully complete understanding of them for myself that I can easily teach. But like as I'm doing this, it does seem too good to be true, right? Because like I plugged this into a little data testing thing. So at 1% risk, at 1 RR, just with the trades I've recorded thus far, that all rhymed. Holy shit. This has taken you up to like 1.8 mil or something. Like it's a little bit crazy. And then I've played around with a few numbers just for fun. Like this is without any of the all-time high rules. Like even a 5%. If you like, again, I'm not vouching, as you guys know. Check out the previous webinar after you're done with this one to understand what I'm talking about right now. But if you just put in a 5% risk here, like this at the moment goes to 14 mil. Now again, there's going to be potential commission and scaling issues that might not make this fully plausible. It actually might make it plausible up to these numbers, and then it might make it harder. But the point is, like, as I look at this, the only thing I can think in my mind is I need at least 1,000 more data points. I'm not sitting here thinking, oh, that's it, free money, right? A lot of people would do that. They would see this and they'd be like, oh, free money. And it's very well likely that the system, because of what it entails, because remember, guys, the system that I'm creating is completely based on everything that I've done from the beginning, right? So every bit of experience that I've cultivated from the very start, to the kind of markets I want to trade, to the markets that make sense for me to trade, to the effect of where that market is, and is it even worthy of looking for in a lower time frame. Like, looking at this, I'm not surprised that there are good results, but I am surprised at how good the results currently appear to be. So my main focus right now is, let me get this to 500 to 1,000. Let me see what happens if I can undergo some, real, some real moments of some more drawdown or losses. Because at the moment, it's really, again, so Jay Barn, I'm not talking about a funded account, right? So Jay Barnes says on a funded account, 5% is way too risky. No shit. You can do it relatively, though. If I'm talking about having 100% access to my capital and 5% risk on that capital, right? That's like saying if you have 10%, then you're risking 0.5%. Do you understand that? So on a funded account, if you had 10% max loss, right, then the equivalent of what I'm doing would be a 0.5% risk. Okay? That's literally like how you have to think about it. So don't think about it as like but on this account I only have this much. It's not about that. As I build out systems, I'm looking at it always from a standpoint of access to 100%, and then I can do the relativity later, right? But my point is, as I'm looking at this, I'm just showing you guys that this is why I collect data. This is why I continuously refine, because the more I do it, the more conviction I'm going to build, guaranteed, right? Like it's almost impossible for me not to build conviction behind a system or behind following a system if I have access to something like this, and then if I do another 1,000, it continues to show this, right? Is always the way I've thought about it, is the way I think about it. And you can also do an RR gain one. Like you can do an RR gain one as well. So you guys can see the actual RR and stuff. Yeah. So like, just to make it less exponential, right? But like RR wise, it's like the same thing. It just goes up, right? Because right now I only have like what? Yeah, I only have like 69 trades, 68 trades. So it's nothing crazy at the moment. It's actually not crazy at all, right? I'd love to see a back to stop process. Yeah, I'll put something out like that for you guys too, for sure. So let's see what we got going on this beautiful Sunday. What's good, everyone? Happy Sunday. Happy Sunday, man. So. Sauce time. What's up, fellow traders? How's everyone doing? Very nice. Studying data collection. Do not touch the yellow. Yeah, do not touch the yellow. That's right. Good morning and good day. What's up, Black? What's up, Michael? What's up, William? What's up, Justin? First live webinar. Happy to have you here, man. You guys seen the new journal someone made? Amazing piece of work. Yeah, dude. I don't know if because I think a few people made an improved version. Oh no, but yeah, it was Samu that made a really cool one. So I'm gonna have this one posted at the end of today for everyone in the hashtag the process and resources. He basically just updated the sheet. he updated it just to include some other stuff. Is very cool. I mean, yeah, you can't. I mean, it's very nice. I love it. It looks good. Looks like he just added a few more things, just made it a little bit cleaner in some regard. Yeah, looks good. I'll make that available to everyone as well. Father Ment, looking forward to the ceremony. I have sinned this week by taking a trade in early stage 1. Forgive me. Bro, what? Yeah, you can't be doing that though. You cannot be doing that, man. Come on now. You're better than that. But also, if it was beginning of stage 2, then that's a different story, right? Then you did okay. So yeah, guys, today, any questions are welcome. I don't have anything extremely crazy to talk about. I have a few things that I of course save as I normally do, that I'd be happy to go over. We can go over a few examples and whatnot. Delete this message. Yeah, and there'll be a few examples we can go over because those should become those will make it more helpful for you guys. So I'm gonna do like a again kind of a play-by-play booklet of what my current system looks like in regards to what I'm looking for, like how I'm looking for it, what time frames am I looking for this thing on, so you guys can go ahead on your own and again build out the same kind of ideas for the time frames that work for you and the markets that work for you. So I'm gonna go through an example because somebody sent me something random yesterday on like gold and asked me a question and I was like, this is like perfection. This is a gold future, but it's the same thing as XAU USD, right? So we'll go over an example here because I was looking at it. I was like, oh, this is like perfection. This is what I'd look for. This is what I would teach, someone else to look for if they were trying to get down my exact system. Jury forgot his coffee. Go get him, man. Coffee with Bailey's. Okay, Philip's already partying today. Doing some marketing. Nah, I just thought that if I'm having these webinars, I should just wear my little Ment hoodie because I think it just makes sense, right? What's up, Peace Pod? Good to see you, man. Yeah, Alex says it right. You're either confused or you're profitable. Exactly. I hate this idea that like join my course, the easiest approach to trading, a step-by-step trading entry, and you will be fine because it's entirely rule-based and every time you follow it, you'll make money. That's the exact same. It's like a better version of, hey guys, welcome to my video. If you see the RSI come over the 80, make sure you sell. And you know that it will revert back to the mean and you will make money here. And do the same thing on the other side. It's like, okay, thank you, right? A lot of traders want to believe that trading is extremely black and white, where as long as you give it a little bit of time, you're going to get down a full system that you just now need to make money with. I've always disagreed with this, right? I've always thought in the form of much more discretion based. But as I love to say, proper discretion, I'm going to actually ask you guys, what does proper discretion over time become for the individual, right? Experience? No, it's edge, yeah. John said it right. It's pretty much edge. And I mean, experience is a part of that, but yeah, it's edge, right? Because if you give someone something somewhat discretionary, but something that defines the way, let's say, the price moves or the way that markets move, and you give them the tools to actually spot those things happen, what's going to happen even if you take, an extremely discretionary based system and tell someone to properly test it? They're going to create an edge out of it. And then if you ask them to pass that same on to someone else, well, the same thing's going to happen. They can only pass on what they do from a standpoint of, okay, here's how I look at a market. Here's what I think about as I see that market. Here's how I view it. And then I look for this to get involved. And it's sometimes like this. Sometimes it's like this. There's rules that I have personally for this to be clear. And then that same person that's asking these questions or learning, right? And this is kind of what happened here, especially with all of you guys. As I'm saying this, your question might be, but why not just take a trade here? And I go, well, it's not really part of my rules. And you're like, but it was really clean. And I see the same thing here. And I also would have made a clean trade for myself there. And all of a sudden, even though I might be telling you, the exact reasons I'm doing this and this, and you're kind of like, okay, I kind of get it. All of a sudden, your focus is shifted to the data collection of trades like these, right? And all of a sudden, you've built out a profitable system and you've built out an edge for yourself because you've understood that the thing that defines a market isn't the entry that Ment is making. The thing that defines the market is the lens, right? The lens through which you look at it, right? And at the moment, at least here at MentFX, our lens has always been through the assessment of models, through the assessment of supply and demand, because models are built by MBs, and MBs are a version of supply and demand. And if we look for contextually sound markets, aka well moving MBs, models, S&Ds, then we are positioning ourselves in the market that's likely to deliver. And almost anything we do for that market in terms of confirmation is going to be met with trades that end up in quick potential losses that we walk away from the market from, quick break evens, and then the same thing can happen where we take another to do the same thing, or we take a loss later, or winners. And then those winners extrapolate into your small winners or your fixed winners, if that's the kind of trader you are, or into your runners, right? And at the moment, we know, like, I bring up Dan every week because, you know, I'm kind of he's very active in the community, so I kind of follow along with his story myself. But he's in the boat where he was on his winning side, right? He was in the quicker, more fixed wins, and he's now starting to move towards the let those larger ones, the larger runners, come, right? So now, instead of, let's say, if I entered here, and I might take my entire profit here, let's say, Dan would be someone that might still even be in this right now with maybe a stop here or down here or something along those lines, right? And that's going to allow for the potential of a market that does deliver to be one that makes him, you know, this much difference in regards to his system. That's his EV, right? So that's the way that you have to think about the markets, right? The markets are not defined by this one way to think, or this one indicator, or this one black and white thought process to trading, right? The markets are defined by your kind of discretion behind a clear solid outline or lens of the market, which leads to extremely clear rules for yourself, right? So I can look at King Nasty, our man King Nasty right here, and I can ask him personally, I can ask him about each one of my trades, and he'd probably say, hey, they make sense. Okay. That could be as far as that goes. But he knows that if he looks at any one of his trades, he's not sitting there going, oh shit, I don't know what I'm doing. He knows that every trade he takes, and he's going to confirm it now, is completely based on rules that he's now tested for God knows how long, right? For hundreds of hours. So when he's taking a trade, it's not a question of like, oh God, here goes my next discretionary, subjective base trade that's going to do some random shit. Instead, it's here goes the trade that matches up with the things that I've tested as per my rules and the rules I built out of my discretion, so I know what I can expect out of this over time. Right? That's always the conversation that he's going to have with himself. And that's the same to be said for any funded member here. Yeah, so he said that gold trade is beautiful. But so King, actually, so the guy that asked me about this was on a 1 minute. So my trade was actually, just so you know, these red ones. These ones. Any one of these as a buy stop would be good in my book. And I'll talk about this today as well. Yeah, so he said beautiful. Yeah, so the 5 minute would not actually give me actually no, the 5 minute also would be an entry for me personally here, right? So that's the difference. Like, this would be my 5 minute entry if I took one, right? So in this case, in your book, it'd be too late in regards to where I'm taking it. But again, it doesn't matter because you know at the end of the day that what I'm doing is going to be profitable for me, whether you agree with it or not. And the same thing goes for you. I'll look at that as a reaccumulation within the reaccumulation. Yeah, like I know your trade would probably be, maybe like in here? Somewhere in here? Maybe in here? Not sure. Yeah. Yeah, I have a general understanding of King's strategy. I know he's looking for kind of the fractalized MB or fractalized double MB off of a clear reaccumulation, and this would really, really line up with that. And actually, while we're at it, King, if you throw on just, go back over your same trades that you've taken even last week, throw on these settings right here for me, and just take a look at some of the areas that you got involved. See if there's any similarities. I think you'll see that a lot of your trades set up after literally this right here happens, almost perfectly. and it might even prevent some potential like poor trades. But that's just something for the future as you continue to refine. Just throwing that out there for you, because I've seen what your system kind of looks like. So yeah, that might be something you wanna look into for a bit. It might give you some more filters for a good market or a bad market. How was Disney? Disney was amazing, dude. Thanks. It's actually very packed, guys, in February. You'd be surprised. I thought everyone's at work, everyone's at school, we're good to go. No. No. There's shit for like 3 hour lines or something. It's crazy. I was like, okay, get me out of here, dude. But yeah, thanks for asking. I had a great week, but we're finally back and it's time to really key in over the next few months. Lodzic says, "Hi, man. Last week, someone asked if you will make a video on how to start and journal your first, let's say, 100 trades. I know there is the Excel sheet, but not gonna lie, when I open that and try to do it, I get confused because I never used Excel. If you'll make a video when you open the sheet and start from the beginning and how you edit the sheet, didn't I make one like that? I thought I made one like that in the hashtag the process. Did I not? I swear I made one where I went over the Excel sheet entirely and said, okay, here's what we do, here's how you fill stuff in, but I will make another, sure." I marked both trades, but didn't enter because I went away. On gold. Yeah, so like look at this, right? How interesting is that? So you like this is a trade that I wouldn't look for, right? But you instantly highlighted as something that you would take. Right? This goes right to that exact conversation I was just having. Yeah. This is great. And then this one, yeah, this one was really clean. Even on the, this is the 20 and 50, it looks like. Yeah, even on the 20 and 50, this was a really clean one, right? Yeah, great trade, man. Well, great spotting of the trade, but unlucky that you weren't able to be there to take it. The message has been deleted. Someone deleted a message. Jonathan says, if we chose to do 5% risk and lose one, would that close the men funding account with the daily drawdown being 5%? Or is that static as well from the original balance? Yeah, if you lose 5% and your daily loss is 5%, you'd lose the account, of course. But I would never, in your entire life, risk 5% risk on a prop account. Peacepot says, Anton, I noticed when you read everyone's messages, you just read it out loud. But when it comes to mine, you read it in your head and then maybe read it out loud. Clearly not. I just read it, right? In the mentorship, we learned how to fly a plane. Yep, that's one of the biggest goals here. Your thoughts on the complications with Meta? Oh, Meta quotes. My thoughts have been the same from the very beginning. If there are complications, then that sucks, but there will be tons of resolutions and tons of solutions to any problems that arise, almost always, especially in a world that is technologically driven. So, unlike many other firms in the entire world, I'm not going to sit here and blow smoke up anyone's ass. I'm just going to make the solution if one needs to be made, and that's exactly what we did. And anyone that was on the US MetaTrader or whatever through Men Funding already got their emails, got migrated, and are completely chilling with no issues whatsoever during this whole insane time where everyone's losing their minds again. My thoughts have always been the same on anything that happens in the online space. I did a bit of this testing. Oh, Dan said he did a bit of the testing for a 1-to-1 strat just for fun and did 50 log trades within like an hour. So 500 to 1,000 is easy within a week. Yeah. Posted the results on Funded and they're very interesting. Yeah, I have not gotten a chance. You guys can see, like, I need to get through a few DMs today. I'll do this after the webinar just to get back to you guys, and I like to do them on a good time where I can actually give them my proper attention. But he said he posted in Funded member ideas. I want to see what he found for it. Oh, so just to follow it up on the 5% risk-based system, the same concept can be used on many different styles of trading. I was bored and was testing something else, but thought that would happen if, during a bullish market in the right context, price creates an FMB to the opposite direction to invalidate price. I then buy stop the high of a triple M, or demand validation and target 1R stop protected at the new validation low. just a tiny sample size of trades, but I'm going to showcase the theory on a very stupid, simple system. Yeah. Yeah. Clean. And like you could even take this a step further and make an even easier, like I don't know exactly what your break even rule is, but make one of those simple break even rules that I was talking about, where like, you know, beyond so some would not even be wins, but like right here you break even instantly and this ends up being a break even. I don't think it ends up being a win. Right here on this candle you break even, and then this one ends up being a +1 to 1. Right on this candle you break even, ends up 1 to 1. On this one just takes a loss. On this candle you break even, it ends up breaking even. On this candle you break even, it ends up winning. On this candle you break even, it ends up winning. On this candle you break even, it ends up winning. On this candle you end up breaking even, it ends up breaking even, right? But you can see how just that kind of rule, almost like what, like 3 out of the 5 delivered, right? And in this case, it didn't prevent any losses, so maybe it's not even worth it. But there are some, there might be a break even rule that may make it make over time might prevent more losses. But yeah, like he just tested an easy 1-to-1 base system right out of the blue, and let's see what he found. Yeah, and just with those trades alone, given the all-time high kind of risk approach I provided, or kind of introduced to you guys last week, he's looking at what, 20% profit. 20% profit, yeah. I believe this is 20%. So yeah, this is just perfect, right? It's a really cool thing to see. Like just this trading here would make you 20% on an account, right? And he's following relatively simple rules. And maybe it's opened up his mind to some new risk management that he might be using soon. He said this has no break-even rules either. Oh, he even said it. It's legit just sharing a random idea that came to my mind. I get loads of random ideas. And no, I have no intention of trading this style of system, just showcasing what's possible. Once you have a really large account, you may want to look at charts only once a day. Yeah, exactly. Right? And like, it's beautiful. You're seeing it firsthand, right? Like, and it's really cool to see this, because I talk about this all the time. I talk about how the people that haven't traded for a while, right, are always worried that their system's gonna stop working. B, if everyone trades their system, the system's gonna fail. If whatever the fuck, insert anything you want here. And here's Dan, or AKA someone that is profitable, who takes a random idea that popped into his head, tests it, and all of a sudden it's extremely profitable, right? So those are like your two sides of the coin of someone that is developing versus developed. The developed trader can literally take anything and potentially turn it into edge, and then trade that edge if it's better. Of course, if the edge if it's more existent in that scenario. And then the person that is kind of developing is almost always worried that, everything is failing, nothing's ever going to hold, nothing's ever going to work. It's just an interesting thing to see. So I think this is a beautiful demonstration of both of those things. And also a great demonstration that, again, discretionary based solid rules create edge. There it is. Same thing here. Oh, he did it again. And he did it on a daily chart. Oh, is this a daily chart here? Oh, it was. So this was a daily chart too. Okay, I didn't even know that. Right? How cool is that? So like, again, as I'm looking at this, I thought it was like a 1-minute chart. I didn't even think about it. But this was a daily chart. And he did the same thing again on the daily here. Bad context, and then kept going off super simple rules. Like, if anything, as you guys look at this, it looks a lot like King's strategy in terms of where the entries are. Right? Like, King might confirm this, but King Nasty, isn't this literally kind of your system right here? In terms of where the entries are, right? Price moves, somewhat reaccumulates, you enter. More like this one. This one's, I think, is perfect, right? Moves, reaccumulates in a very clear way. Something inside of here, double FMB or FMB, and he enters, right? And you can see how that would line up with someone else's profitable system. There just might be a little bit different for the kind of entry, right? King said it himself, right? Trending market, price moves against trend. Yeah, trending market, price moves against, reaccumulates, and then we keep going. And then Dan says, there are no refinements here, legit just very mechanical. Refinements could make it even better. Exactly. But that's something very important. He added, he said, it's mechanical to me. The problem is, right, if I try to give this exact same system to the guy that showed up today, okay, so the brand new guy that's watching this webinar for the first time, he's like, oh my God, look how much profit. If we took the exact rules Dan used to get this and we sent it straight over to this guy and we said, okay, We're going to back test for you, and you're going to record your first 10 trades, your first 100 trades. Do you think within those 100 trades you're going to see? What do you think you're going to see? That would be actually really interesting. Maybe that's something we'll try out. But I think you're going to see just likely a negative EV in terms of over time just kind of coming down. Yeah, we'll likely see him asking why it's not working, right? Because again, like what Dan sees is this being a clear reaccumulation, right? That guy could literally be watching this and go, okay, that's reaccumulation, right? This is a reaccumulation, but this is clearly reaccumulation, right? I don't even know, but random results because trading in bad context. Yeah, yeah. And again, same rules where he did the risk thing. Yeah, ended up 33% up. Exactly, right? Absolutely beautiful. Yeah. Dan, what do you think of this risk approach though? As you tested it. You like it? Nice. Yeah, it's interesting. It's a good one. And for anyone that is new, that risk approach in terms of like what the thought process behind it and how to think about it, it's more advanced, but it is available in the previous webinar to this one. So 140. It's all right there. Yeah, so really cool that Dan did some testing on that too during the week, and we get to take a little look here at what he found. Alex says the system is almost 99% break even. You have almost no chance for drawdown. Right, but that's kind of what happens when you pick the points at which you're going to enter to always be points that have like even minor follow through that allows you to break even, right? But that also means that some of this follow through that it has, and it does come back to break even, it then will run after, right? Because a lot of my trading, a lot of my testing that I've been doing, it's shown that even with my break even rule, sometimes it'll run to 20 RR after, but it's so much more worth it for me to be able to have break evens along these lines, because Jesus, it makes the system like that much easier. And it's always the same thing. Just the buy stop of like ICIs. This was a little bit later in the day, so it's not important, but yeah. Yeah. On a funded account, 5% would be too risky. Exactly. I made Google spreadsheet that follows the calculation rule with a dynamic risk system. Oh, like, oh, you made one that does the 5% if you're not at all-time high, if you are at all-time highs? Pez? Is that how it works? Oh my god, yeah? Let's put it in. Here, I'll make a copy for myself. That's really cool. You can change the risk in advance, so I'm guessing that's somewhere at the bottom. Strategy, make millions. Which one is it? Which one is it, Pez? 0%. Oh, 0.25%. So let's say normal risk. Is this normal risk right here? This guy right here? Yeah, but this is normal risk, right? Oh, risk equity 1, risk equity 2. I see. Okay, yeah, 5-1. What does this one do? What's the point of ORG? It's for normal journaling. Okay, cool. So this is just total that it ran. Okay, so let's take a look. Where's my Excel sheet? So we have break evens. Okay. Oh shit. I have to actually press it. Damn. If only I could just control V it. I don't think it's properly grabbing the information though. I think I broke it. It's fine. Whatever. Total RR. Okay, nice. Then I can edit this one, right? And then these, I'll just make them all yeses, because it's almost all yes. And which ones were no? 48, 48 and 10. 48 and 10. Okay. Commissions. I mean, the commissions are not too crazy. Yeah, it adds up. That's cool. That's pretty cool. I don't need to change the account balance. It's not a big deal. Make it 10%, bro. Go crazy. We broke it. Nice. Yeah, it's cool. I gotta find a place to upload that too then. Oh, wow. Very cool, man. Thank you for putting that together. Damn, you guys are all geniuses over here. It's actually insane. Funded account is 100K, real capital to work with that. So calculate based on 10K, not 100. Yep, exactly. Man, could you maybe make a backtest video in the future with this new system? Yeah. I'll even go over, because it's not a new system, right? It's still just trading this or a version of this, right? Because I'm just still ICIing. But I'm going to go over an example here because someone asked me about it, and I was like, you know, this is a perfect representation of what I'd kind of be wanting to trade right now. Current curve. Oh, so WTF Alex says current curve on 110 trades with the 1-to-1 and the aggressive break-even style with 25% at 1RR, 75% at 10RR based on the last webinar system. Did you upload it? Oh, you did. Yeah. Wow. Look at that. Minor losses, big wins. Minor losses, big wins. Yeah. 100K. Yeah, you 4x'd it. You made 400%, right? Is that 400%? In 100 trades? It's not too bad. Sounds like a pretty good return, not gonna lie. Hands on, how often should we be checking our medium time for our MTF/validation time frame for overextension? Every time you're looking for a trade. Assuming 35-1, should we wait for a new 5-minute correction to MAs plus new S&D validation every impulse, even if price doesn't feel extended? What do you mean by it doesn't feel extended? If it's not doesn't feel extended, then it's not extended, right? If it is extended, then it's extended, right? You should have rules around extension for yourself. Like as I go over this example here, this, for instance, would not be extension. But if price is here, I would not want to touch it on my lowers. I wouldn't even consider touching it here on my lowers, right? So I'm a little bit confused by that question specifically. But if it doesn't feel extended, then I guess you can keep trading it, right? -1 here, even though it doesn't feel extended. Yeah, but it's not about feeling, right? What is if this is a 5-minute chart and you're entering on a 5-minute chart from what it looks like, then your validation is what, around a 30-minute, right? And if the 30-minute is moved away, I would be waiting for it to come back and start a new move somewhere later. Yeah, I didn't take the gold trade. Yeah, I haven't traded gold at all. But someone brought it to my attention, and this was beautiful. If anyone traded this thing, it's just phenomenal. Yeah. How is testing going for the new system? Very, very well. How much RR were you up in those 68 trades? It depends on what your risk management is. If you're managing at 1 RR every time, it's up about 55 RR. If you're managing a 5 RR target, then you're up 100 RR. If you're managing a 20 RR target, then you're up 40 RR. And etc. Could you please describe what can you expect from MAs and what you do not expect, just in short? Sure. Stage 1s are usually chopper moving down. Stage 2s are often expansion of MAs in kind of this way right here with pauses and continuous expansions. New stage 1s or intermittent stage 1s are often contractions, very clear ones, or even undercuts, but not huge. And then they repeat this until the trend comes to an end. Take a look at any trend, take photos of it. You're going to get used to it, right? Expansion, minor contraction, even undercut. Expansion, minor contraction, or even undercut. If it wants to expand, there's going to be trades available in these moments here. Right? The market repeats itself over and over again. You just have to get used to following what it does. But again, like, you know, I can say this as many times as you want, but until you start like taking photos of it, you're not going to get really used to it. That's all I look for in them. It's not like some crazy thing. And then on top of that, I look for the market itself on the validation time frame and the higher time frame to not be in an extended moment. I'm looking at the MAs of those time frames as well. Usually, when there's a good setup, let's say on a 5-minute, if this is a good 5-minute setup right here, I know for a fact that here on the 30-minute, the price is going to do what? It's going to be likely surfing the rising 9 or 20 right around here. And if it is, then it almost makes this setup even stronger because it's not overextended. Let's take a look at the 30-minute. Take a look at where it is. Price is surfing just a newly rising MA is moving upwards, right? That's where I want to find my trades. If I then look for this exact same trade here, now I'm just trolling, right? That's late. So now if someone comes to me and says, hey, is this a good 5-minute setup? It's like, well, it looks good, right? It looks the exact same as this one, but it's bad because contextually now, from a standpoint of my validation time frame, it is far extended, right? So this might even help John with his question earlier. You know, this is far extension in regards to the actual price of the higher time frame. There's a big difference between this price here and then entering there versus this price here and entering there. Two very different. Now, if this starts coming down, goes sideways, and again, gives you a 5-minute setup here, what do you think is going to happen around that time on the 5-minute here? You're going to get that undercut like we spoke about. It's going to start expanding, and you're going to get those 5-minute trades, right? So that's how I use them. They are just another lens from which to view kind of the back and forth of stage 1 and the stage 2, and at the same time to give you an understanding about whether the orders that are coming into that given market are at a point where they're going to continue to support price, or if they've basically there's too much money that's come into it, right? Because like you know that the orders that are coming in here for longs are very much supporting the underlying story of what these averages are showing you, and it's likely going to it's going to likely result in an expansion away because, well, money's now behind it. But if you do the same thing here, there's a very different story because now no longer are the averages being bought up. Now you're far from them. So taking trades in here as longs is likely going to be met with, since those orders are no longer supporting, you know that the people that have gotten involved here, me, smart money, whatever you want to call it, are taking profit here. This is management and profit taking until either a reset or failure, right? That's how markets move. So the people entering here are way too late to the party, right? The same thing happened with Bitcoin. Let's go to my trade here, right? Same thing happened with Bitcoin, right? When I'm taking my trade here, I know, right? You can see like it's the exact same things happening, right? You get that move, you buy stop into it, boom, right? And then it expands. Look at where that long is being taken. And then on the higher time frame, let's say the validation, the daily, look where it is, right? It's the same thing. It's surfing the average. The average is showing you it's being bought up. So then the 4-hour delivers. And then all of a sudden, everyone is interested in Bitcoin now. Here, and here, and here. But look at where it is. They're ICIs, but look where they are. Are the averages being bought up? Or is the smart money taking its profits from the criteria, from the entry that was made available to you? Right? That's the question you have to ask yourself. So, you know, I took my profit. Look where I took my profits. Exactly at those points. And at this point, people were looking to long, right? So I'm literally selling into the liquidity of the people that are unable to understand when a market or a trend actually begins, and then want to start getting involved way late because now, holy shit, look, Bitcoin's making a move, right? Oh my God, I got to be in it. So like, even if this set up right now on a 4-hour, I would not be even considering taking that, right? Well, actually, give it a little bit of time because it's almost catching up. Like, let this try to catch up a little bit, right? Let them constrict, and then that's where the 4-hour setups are. But then at that point, what's funny is, what do you think has happened to all the people that were starting to buy here and will be buying all the way through here by the time I'm buying here? What's happening? This is how markets move. I've spoken about this time and time again. What do you guys think is happening to those people at that moment? Yeah, they've either given up, they're sold their position, they've gotten liquidated out of their position, or shaken out, as they love to say it, right? That's where that word comes from. That's how you get shaken out. It's when you don't understand the or they flip to sells. Exactly. They start becoming this sell liquidity that you're now going to take out, right? Because now they're like, okay, it's slowing down, it's going to fall down. So now they're all shorting the market in some way and getting ready to average down, and we build our cloud of liquidity. True liquidity. Didn't need an order book, didn't need a special secret imbalance to go find on the left hand side of price, just needed to understand how markets work. This is how markets deliver, right? Jonathan says, I'm looking to get funded with your prop. If I run into issues with Meta or anything of that nature, where would I go to receive any help? Just the men funding support. They're usually very, very helpful. They'll reach out on your behalf, check with the back end. Like you shouldn't have any issues. But yeah, like, and notice this is like a 4-hour chart. It's the same thing though, right? Look at where the entry is. So the guy that asked about the MAs, right? I hope you're seeing this. Look where the entry is in regards to the higher time frame. Look where the entry is on the entry time frame, right? Look at the expansion that comes from it, and look where I'm no longer taking trades. King says, are you still in Bitcoin? Yep, I'm still in this trade. My stop loss is right here. That's off the 4-hour. Double MB rule at the moment. Right here, I have a stop. Right, and you can see how it makes sense because now, I might get shaken out, okay? But likely, whatever goes on here, those shakeouts will happen. It'll probably even pause for a week. 2 weeks from now, we'll be at all-time new highs again, right? On the 4-hour at least. I don't know, where's this right now? Is this at all-time highs yet? No, not even. Yeah, it's close. Yeah, it's very likely going to be like I said this over and over again. It's likely going to be all-time new highs, right? Like, how long did I say this was going to happen in? Yeah, about a year, right? About a year and a half from now, this will be up in the, like 90Ks, 106Ks or something like that. Yeah, like, 85, something like that. Again, and it's just how markets function, right? Or it'll just roll over and I'll just walk away because I'll already be out of the trade as is, right? So that's the beauty. Got to head off earlier today. Catch you all on the Discord. I'll see you, Dan. Appreciate you, man. Thanks for being here for the time that you could be. So, Diplo gang, I hope that that made a little bit of sense to you, and I hope that that helps you out a little bit. But all it is like expansion, contraction across time frames, and expansion equals stage 2, right? Contraction equals stage 1. And then you put that together across time frames, and you put that together with models, and you have a very, very good lens for a market's ability to make a move. That's how I think about it, okay? What is your outlook on gold? So I think we've been bullish for a very long time. It's just that it's been a lot more sideways. But almost always, right? The first thing I'll do is I'll jump into the screener for anything that I'm looking at. Right, and I'll look at this, and I'll say, okay, this lines up for what I thought was going to be the case. So overall, somewhat bullish, some hints of bearishness in it, right, is really all it comes down to. Now, I know for a fact, because of prior action, gold has been very bullish too. So that's also playing a role in my assumption of it. So if I look at it, I'm just going to look at the gold futures, because why not, right? You're going to see kind of exactly that reflected, maybe on a weekly first. Yeah, so this is exactly what's being reflected. So if we look at a monthly first, and we kind of start here, we've just been delivering bullish nonstop, right? Bullish, reaccumulation, bullish, accumulating. And I spoke about this I spoke about this over and over again. I said we'd be at all-time new highs, and we are, and we're probably going to continue this trend now, higher and higher, probably 2,300 or so, very, very easily, almost guaranteed. Okay, so this is likely going to continue its bullish move, right? So at least on the monthly, it's very, very bullish. The weekly shows the same thing. You have bullishness, reaccumulation, and the accumulation is now holding and moving long. And if anything, right, based on the timeframes you're trading, this is already starting to set up in a very beautiful way for a new stage 2 markup. You guys should be able to see that, right? Take a look at what it's doing with the averages. The question now is it being sold into the averages? Let me just ask you, like, even if you're new, when you look at this, is the market being sold heavily into the averages, or does any move onto the average show you that large buying is stepping in? Whether or not the future is going to be a huge flush out or not, what is it showing right now? Right? Yeah. It's showing that it's being bought up heavy. So that means that we're on the cusp. We're in the cusp of moving to a stage 2. Now the question at that point becomes, based on the time frame we're trading, let's say, if you're a weekly, then you're maybe trading a daily or a 4-hour chart. The question then becomes, have we entered into a clear enough stage 2 that taking trades now is not going to result in back and forth losses? Those are the kind of questions I want to ask myself when I'm taking something, right? So when I'm looking at this, the daily is not showing me that. So the daily is in very good model, even though it says redistribution down here. What does it mean when there is a redistribution, but it moves like this, where the move that was created by it is this heavy in regards to where it came from? It shows me that there's still larger buying. This is basically section 1 material, guys. What is this concept known as when I look at price kind of in this form right here? Who remembers? Section 1, guys. Section 1. Not accumulation. Nope. Section 1. The very first section ever. Yep. Maki got it. Maki gets a free month of mentorship for that. It's institutional structure, right? Institutionally, the move created by this is extremely heavier, is extremely larger than the moves that preceded it. So even though the indicator indicates redistribution, the market is saying accumulation. So those are moments where the indicator is not going to be in line with what I'm looking at, right, when I look at it. So that's important to me, because that does what? That replaces some of these with what? Green, all of a sudden, right? So that's the way I think about, like, so again, the screener is good, but you cannot rely specifically on, like, this is the only thing that needs to be correct. It's like, no, you look at the market. You looking at the market is always going to be the final frontier. So right now, I would say on the daily, we're not entirely ready for that move. But if you are a lower time frame trader, then you can see we are on the cusp of a potential stage 2 within the daily, which leads us to, well, actually the 4-hour had, I don't like that it undercut here, right? But it had a potential setup here. It's harder because look at this. It's been going sideways for a long time. So I would probably even ignore all these setups until literally right now. So gold, at least on the 4-hour, has entered a market condition where it actually is now potentially worth it to start following it. Because now you're going to get those kind of moves that then start and deliver your accumulation, right? 30-minute has clearly begun its reaccumulation. You can see that if you're a 30-minute based trader, where would you want to look for trades? Right? Everything's pointing to the same thing. Accumulation begins, reaccumulation starts, price moves higher, and what does it do? What is happening right here? Here, I'll move this green point down. There you go. What is happening at this point? What same concept do you see being occurring over and over again as we're looking at other time frames or through the time frames? Not ICI, prices being bought up within what we supposed to be a potential start of a stage 2 within an accumulation at the averages of its price, which basically means what? Anytime price wants to go lower, what happens? Who steps in? Or who's potentially stepping in? The composite operator, the composite man, big money. So what does that mean for us based on the time frame that we might be trading if it is a lower one? That's our opportunity to get involved, right? So then if I go to my time frame, let's say if you're a 1-minute trader, let's go to the 5-minute. Guys, what's the 5-minute showing at this point that I show the 1-minute entry? Is price, before it even gets here, in accumulation? Yes. What's it in after it breaks down once? Reaccumulation. Is price, from a standpoint of averages, failing them heavily at this point, or is it fading? This is a word I sometimes use. Yeah, it's fading, which means that, yeah, it could fall off, but it's having trouble completely falling off. And then all of a sudden, huge move. And now what is happening? What is money doing? Yep, it's pumping into it. So at this point or beyond, what should I expect out of price from a standpoint of like a 1 minute chart? That it's going to enter a what? Yep, green box. Otherwise known as, yep, stage 2. Is this concept any different from anything we've done in the last few weeks, months, whatever, in terms of looking for markets that are in potential moves, to make potential moves, free money space, right? And if we look at it at this point now, this is why it's so important to train yourself with images, right? What do you see? I see endless amounts of people that want to do what? This is what sellers look like, guys. That's how liquidity forms. This is what liquidity is. Liquidity is nothing more than this right here. Do you understand? That's liquidity. That's the only thing liquidity has ever been. That's how it's looked. It's not some special crazy tool. It's not some order book. It's not some order flow. It's not some change of character or whatever the fuck. This is what liquidity looks like. It's just understanding that this is how people operate. This is how people think. And that's when I'm stepping down and saying, I'm a long trader here. I'm looking for that move. Let's go to our 1 minute. If that's your execution time frame. Now is when you look for your actual criteria for entry, right? I mean, I already have it drawn in, so it's kind of unfair, but whatever. It is what it is. Price starts to expand on MAs from the guy that asked earlier. Price starts going sideways. And now again, please don't get confused by the fact this is an ICI, right? So this is the ICI I'm kind of looking at here. Just the multi ICI to buy stop, okay? But also, what is this? What is this? That's a version of a double MB. What is this? Another version of maybe an intermediate double MB, right? What is, what is this? Some version of a cluster, some version of multi-fractalized MBs or fractalized double MB. What am I buy stopping? An ICI, otherwise known as, well said, Alex. Yep, the most relevant MB, right? Or the relevant MB to me. Now, how did I come to the decision that this is a relevant MB? Did I A, use the models? Did I B, use other timeframes? Did I C, use other timeframes, MAs, or models? Did I D, etc., right? I hope you're all seeing this. I didn't do some crazy shit to decide this is the MB and that's it, right? I went through the process for myself and I said, is there a good chance that this market can run? Is there supporting price action that shows me price wants to run? Okay. Then there's another. Then another. Now, I only consider this one because it's right on the surfer and it's the very beginning of the expansion, so you can assume another expansion. Same thing right there, and then I'd be done. Even if it starts making another, like right here, this is another trade, I wouldn't do it anymore because we have far from expanded from this. So now again, I'd be break even on this trade right here at this candle. Okay, so if now price comes here, I'm done. There's nothing more for me to do. And already, if you guys can see this already moved 1-to-1 RR. And then it goes. Now, again, I would not trade this one. It's too late in my book. But there you are. That's delivery. And now the problem is someone will come to me and they'll say, hey, Anton, can I buy stop here? Well, first question is this an ICI? Oh, be careful, guys. The people that just said no are completely wrong, by the way. The question wasn't, is it a good one? The question is just, is it an ICI? The answer is yes. Is price surfing on the 1 minute the averages like it was back here? So again, some people are saying no, but the answer is yes. Because remember, just because a setup looks the same does not mean it's the same because of what? It's higher time frame. Now, if I go to my 5 minute, are these setups in regards to where they're happening the same? And that is the difference. So you see, the problem is that a lot of us want to attribute, some difference to this versus this that made this fail. But we're forgetting that the difference isn't in the actual setup. The difference is in the context of the setup. Where is it happening? When is it happening? In what model is it happening? Where does it exist on that higher time frame as it's occurring? Is it still a good trade given the fact that the higher time frame has shown us where it is and where this initial setup was? And then all of a sudden, you have a very different lens from which you define the price, okay? So this is a big problem because the people right now that said no to the questions where I said, is this an ICI or is this or is this or is this? The people that said no are the same people that are going to have those mistakes made in the future where they're like, I can't seem to understand why some ICIs are taken by you and others aren't, even though they look the same, right? Does everyone see where that issue stems from? And again, this is not an attack of anyone. This is more of like if this is part of you, something and a mistake you're making, start recognizing that it's not just about the setup time frame, okay? It's about where the setup is happening and when it's happening. Because I get questions all week long where, someone will send a photo and they'll say, hey, Anton, do you like this ICI? Well, here we go. Yes, it looks like an ICI. Yes, it looks like this one worked out, so that's great. It now depends on the higher time frame. Where is it on the higher time frame? What's the MAs of the higher time frame doing? What has your testing shown? Right? The answer, if you guys kind of look through the mentorship on repeat every week, that's kind of the answer that you see from me over and over and over again. Because it's not based on, is this CS good? Is this ICI here good? Is this one good? If this one happens and it's within the context of this one, I consider this one probably like a 7 out of 10 based on how it looks because it hasn't pulled back the way I would want to the MAs. But also, it might even drop to a 4 out of 10. Why? Because of where it is in regards to even the 1 minute MA. From the point that it expanded, and you're entering here now. Because then the question becomes, what question would I ask someone if they gave me this setup here on a 1 minute? Can anyone guess? What question would I ask that person? Not context. What would I ask that person given this prior price action? If someone sent me just this trade here, what's my first question I ask them? Damn, nobody got it. I mean, these are good questions. Yeah. Kika is the closest one. The first question I ask is, why didn't you consider this trade, or this trade, or this trade, or this one, or this one? Why is this the first trade that you're considering given this market? And then this leads to usually what issue? This leads to the issue of, I'm very uncertain in price, so I'm only going to enter when I'm fully convicted that it's bullish. But by the point that you're quote unquote fully convicted it's bullish, what are you? You're too late. Right? And exactly like Aid just said, you need to learn to see the move before it happens, not after. You need to learn to spot this move that's going to potentially happen here and here. You can't be spotting that move here and wondering why your ICIs are not working consistently. You understand? Or why your MB buy stops are not working consistently, right? Similarly, I think my boy King is here, right? King, you here? I hope you are. King, my king. Maybe King Nasty's taking a little break, but that's okay, right? King might be looking for a trade already here and here. Maybe he'll consider a trade here. But then if you come to him and you say, hey, King, I tried to trade this reaccumulation. First question is this a reaccumulation like this one or like this one in regards to just the price action? Yes or no? Again, so Al says no, but it is. Price goes up, price comes down, you look for a long. Price goes up, price comes down, you look for a long. Is it the same price action? It is. Is it a good trade in regards to a reaccumulation model now? No, it's not. So again, even every time I ask these kind of interactive based questions, you can see firsthand why people have these issues, right? So in this scenario, we had Al or AI, and I don't know the exact name, make this the problem that I just said would happen, right? If you haven't done the work prior, right? Where you see this trade as not a trade now because whatever, but it's the same trade as this one or this one. They're just happening, right, in different contextual moments now, and that can make or break you. Right? Because if you're a trader that can like, let me ask you guys a question. So here we go. Price starts to move, reaccumulates, you enter a trade. Right? Reaccumulates, you enter a trade. Let's say you're that kind of trader. Okay? Now, let's take trader number 2. So this is trader number 1. Let's take trader number 2. Trader number 2 sees this, waits because he doesn't like it, he's unsure. He sees this, he waits. He sees this, he's like, okay, it's bullish, and he enters here. Now, it does make a little move, that's fine, too. So, which trader over time will make money, and which one's going to almost guaranteed lose money? 1, exactly. Because 1 is trading in anticipation of the move given confirmation. 2 is trading in fear of the move only once he's almost 1,000% sure that it has to be a bullish market. Right? Trader 2 is the trader that's looking for a trade on Bitcoin right now at that level. Well, it's actually not terrible right now, but trader 2 is the trader that looks for a trade here instead of here. And over time, 2 is going to lose money. Or potentially lose more money, right? Now, there are ways to, there are rules that you can have and ways to trade that might make it less so, but that's oftentimes the case. GC. Okay. Damn, it sucks my boy King left. And just one more thing before we move on, but to continuing to read over things, right, is I just want to bring one thing to your attention. I spoke about this like last week as well, but imagine a market right now from left to right, okay? Starts its move. Trader 1 takes a move here. That's trader 1. Okay. Trader 2 takes a move there. Now, first question is, are both traders entering at the same price? They are. Which trader is going to lose money over time? Which trader is going to make money over time? Right, so isn't that interesting? When I draw it, it all makes sense, right? But people don't think in this way. People think, I need to get the best price right now, and if it goes higher, I missed out on that opportunity. But they don't realize that this setup here, even though same price, is going to make you money, and this setup here is going to lose you money. So that's where the trader here, this buy stopper, is going to lose money, but the same buy stopper that buys here, here, or here is going to make money. Does everyone see that? Does everyone understand that difference? The context of this trade has significantly changed at the same price from the context of this trade. This is the beauty of trading. This is what I absolutely love about this industry. I think this is such a cool thing. This is embedded in, like, when you look at this, you should understand how the skill of patience is literally embedded in trading. The skill of patience gets you in at the exact same price, nothing different. But you make money. And this guy loses. Right? Two traders walk into a bar. One says to the other, I bought GameStop at $50 today. The other trader says, wait, I bought GameStop at $50 too. The first trader says, yeah, I made $3 million on it. The second trader goes, how the fuck? I lost 400K. This is how. Right here. Trader 1 bought here, lost 400. Trader 2 waited for his setup, made 4 mil. 2 mil, whatever I said. Now that's sauce. Now we're learning. But that's how markets, that's how it works, okay? Like, that's really it. There's nothing more to it. Johnson says literally what I'm looking at as you said it. Yes, exactly. Trader number 2 that is super confused why he's not making money. Trader number 1 that bought actually at the same price, if not even higher, and made money. Right? Again, guys, same thing. Two traders walk into a bar. One says, I bought at $50. The other says, I bought at $50. The first one says, damn, we both had a bad day because I lost 500K. The other one says, what are you talking about? I made 4 mil. That difference is called patience. But it's also called knowledge, okay? It's when you understand what you're waiting for in regards to a market. I forgot which one was 1 and 2. But this one's fine, right? Now imagine you entered here, right? And then look at the other trader that enters here. This is that understanding right there, right? Losing trader, winning trader, same price. Okay? That's really good. That's really good. All right, let's keep going through some of the messages from you guys. Damn, we typed a lot, didn't we? I'm gonna go from the 11:18 a.m. moment. In the process of collecting data while we were forward testing, those trades are recordable or only the back testing trades? You can record any trades you want. Do you consider a flush out the same as a reaccumulation? Yeah. What's your experience ICIing on EU? You should know. It's the exact same. Just there's been no context for it for a while. If you find a context on EU, like the example that was provided today right here, where the 1 minute, let's say if you're entering a 1 minute, looks like this, accumulation, right? Ready? The 5 minute, maybe the validation time frame looks like this, surfing nicely in accumulation. The higher time frame, let's say hour or 30 minute, same thing, accumulation moving higher. And even then, if you have the confirmation of even higher if you want, then you're probably going to have a good trade. If that doesn't add up, if you can't find a moment like that, then you understand why I haven't been trading EU, right? That's really it. Overextension usually invalidates something on some time frame. Exactly. What MAs have you set now? Yeah, right now you can see it right here. Here, I'll leave this up for now while I read through a few more questions. Hey, Ment, how would you manage your trades when a broker doesn't let you partial? I've never heard of that, to be honest. So get with a broker that lets you partial if that's part of your system. Otherwise, create a system where it's fixed. I mean, that's really simple, right? John says the 5 minute is my medium time frame, so validation time frame. So I'm taking 1 minute entries in these areas. The 5 minute doesn't feel overextended, so I continued looking. Should I always wait for price to surf above rising MAs before entering? I mean, I have rules personally to do that, right? Take a look at here. Here's my journal that I've been taking recently, right? Let's find a trade. You know what? Actually, guys, name one of the ones that you see here, so you know that I'm not like picking something. Just name one of the names you see here. Okay. AMR, sure. Let's look at AMR. Where is it? I don't even see it. ARM. Okay, ARM. ARM. Okay. Let's look at the trade. Here's the trade. Okay. Well, let's see where it was on the 30-minute. Is it surfing and above the MAs, or is it way below them, fading / way above them, and like it doesn't even know what it wants to do? Right? Yeah, it's surfing and above. And let's look at our higher time frame, the 5 hour. Where is it? There it is. Is it high above price where it's, it's potentially extended, or is it around the same action? Looks almost the same, literally, as 30-minute, right? So again, to answer your question, John, I have, rules for myself that determine whether or not something's even worth looking at. If your rules are that it can be below an MA or way above, that's fine, right? But you need to test them. You need to be aware of them. I personally look for the ones that are willing to now make a stage 2, right? Because now the stage 2 means that price can make it all the way up to 171, which means if I can even get a move here from 135 to 139, I can already make 1RR or more on that, right? Which means that all this becomes what? Free money space for me. So because I have the opportunity available there of all that money that can come in, I know that I can not get just one trade, but actually multiple. And if I'm wrong, I'll be wrong very quick, and price will be here and I won't even be touching it. Or I'm going to be very correct and I'm going to be making a fuck ton of money over the next few days on this thing as I trade it, right? Because it's doing one thing now, right? When price is here, I'm looking for longs. These are the longs that I get to be in. This is the free money space available, right? When I'm looking for longs here, these are the longs that I might get to be break even or small wins, and they might make me more money, but then they fail and I wait. These are the longs that I start watching for. Look where the trades are. You can see the little green dots. Those are where the trades were. And even when I'm wrong, which you can see right here, that's the first green dot. I'll show you the first green dot. This one. I take the trade, it's still a break even for me. This ends up a break even. Well, that's because of the rules I'm trading now. But again, those are the kind of moments I'm trying to find for myself now. Because it just means that, I can take, my risk is non-existent now on these things. Like, I don't have to worry about risk, which is amazing. Yeah. So what movement on the MAs would tell you it's having a shakeout or going down? When it's failing below them, right? Or when the higher time frames are failing below them. Philip says, any chance to get in the trade view models for more than one time frame on the down right, so we could set a filter for 3 or 5 time frames, so it shows models and time frame we are in. Yeah, I mean, I'm looking into it, but it's probably going to be only done through the screener. I'm not sure. We'll see. I'll see what I can do. Sorry, just got back and caught the part where you said about the strength of the move. Would you also consider respecting an S&D? Sure. Right? Here's an S&D being respected. And then here's a building 2.0s off of it, right? If you want to do it that way. Sure, you can do that. If you use split screens on TradingView, is there a way when you mark one of the chart that two charts would be marked also? Yep, there is, but that's something. I mean, you can look that up. You can play around with your TradingView. I don't use that functionality for myself personally. John says, as a 1 minute trader, would you be waiting for a 5 minute S&D validation inside that surf? Nope, I don't need it. Or is the S&D validation from below still fine? I don't need the validation of a demand here, right? Demand is basically being validated to me through the models, is the way I think about it. But I introduced that in the remastered course because it's going to give a lot of people that are impatient the ability to be patient for some kind of bullishness to be there, so that then, you know, even if it might be a little bit of a stage 2, because stage 2 will begin there, even if it's a little bit, they'll be able to start seeing how markets move, and then they'll be able to get positioned for them. So yeah. Emka says, I found a very simple trick. You can visualize stage 2, drop the RR tool with the stop being somewhere in the stop box, and set the RR to 1 to 3. Oh yeah, you can do that too. That's smart. Yes, you know where it ends. Sure, that's one way to do it mechanically. It's crazy the development you've made from MBs from Webby 1 to now. Yeah, I mean, it's just gotten better and better for me, so I'll take it. Mako says, people say to buy low and sell high, but with ICI and models, we do the opposite. Yeah, of course. The only way to make money is to buy high and then sell higher. I don't know why people say buy low, sell high. It's the dumbest thing ever. You buy high, right? Then you sell higher. But you don't just buy high and then hope that you can sell higher, because, you know, that's also a bad end of the stick. Why not buy the first high in that range? Which one? On the 1 minute? The first high in that range. I don't know which one. There's a lot of highs. And I don't know what range. ICI everywhere, doesn't matter where you look, even to the downside. Yep, of course. This webinar has been amazing. Okay, I appreciate you, bro. Bro. Me when someone asks if something's an ICI. Learn to see the move before it happens, not after. Yeah, exactly. What's up, Anton? Do you consider fractal stage 1 and 2s? In what sense? Across multiple time frames? Yeah, I do it all the time, right? That's exactly what I did here. I'm entering this with the expectation of stage 2. Why? Because the 5 minutes in the stage 1, about to enter that stage 2. Why? Because the 30-minute or the hourly, whatever you want, is surfing in that stage 1 for that stage 2. Or the hourly, same thing, right? Surfing that for the stage 1 into the potential stage 2. Yep. There's the fractals, right? Will it make it a good trade or reaccumulation after breaking the MB, a bigger flush out? That's up to your testing. Personally, I haven't seen any big difference. Again, right, if your rules were that you're only taking trades if it makes a true reaccumulation, which is a breakdown, right? So like this kind of thing, all that happens is the number of opportunities that you can take on any one market does what? They decrease. That's it. That's all that happens. If instead you're okay with, let's say there's a range and price does this, I see these two things as very similar. Okay? Your opportunities increase. The more opportunities you have with positive EV, the more trades that you can take on any given pair when it sets up, right? Which means that you make more money. theoretically. But if you're starting out, I would agree that this might even be a better thing for you to do. Why? Because less opportunities means more focus and refinement on one specific kind of bit of something happening so you can get used to it, right? So, yeah, it's I think if you're starting out, you should just focus on wait till price reaccumulates to look for a trade. Wait for it to reaccumulate to take a trade. Don't just take them because you think it's reaccumulating. Wait for price to reaccumulate before you take a trade, right? Wait for price to reaccumulate before you take a trade. If you're starting out, I'd probably do it that way. Less opportunities, but you'll have more conviction. Because again, when you trade more action, then and you're doing it all without the prior testing, well, then there's a lot more variables that are potentially available at any moment, which means more confusion, less conviction, more time that you might have to take to do it to get better. Alex says, in 3 days, I realized the countless mistakes I've been doing in these year and a half since I left the group. Well, now you're back. So that's really good. But Alex, because I want to hear this story, because I think it's very interesting. I think after this webinar is done, if you can write down in like a notebook, a journal somewhere, what some of those things are in your mind, like what have you noticed since you've come back? What was going wrong? What did you hear that really made you just say that? And try to and drop that message in hashtag psychology and tag me, or hashtag testimonials, wherever you want. Because I think that'd just be a really good read and also good for you. But I'm really happy that you're back. So welcome back, dude. Aid says this is so accurate. I used to be more the trader one. Yeah, a lot of people do that, right? Like I used to do the same thing. Like the people, again, it's the same thing on repeat, but the person entering here is the loser, trader one, right? The person entering here at that same price is a winner because he waited for his price, or even enters higher, right? Because this price is even higher, but it's very different, right? I think if we took one really important tool from today's webinar, it's the trader 1 and 2 walk into a bar, right? And they have their discussion. And both say they did the same thing, but one, lost a fuck ton of money. The other made, 3x, 4x that guy's money. What happened? This is the difference. That's the difference. Draw the line across. This trader is a money maker, printer. This trader is a potential loser. It's a very cool way to think about trading too, because it really shows you the discrepancy between people when it just comes to patience. Patience makes money in this industry. Put patience together with a good rule set, and you have a guy that's going to transcend space and time. Okay. Anton, I learned ever since I laid eyes on you, for real. Okay, peace, bud. Bro, you're crazy. Oh yeah, true. And quickening, yeah. If trader 1 wants to succeed, right? So if trader 1 wants to do well, then he has to potentially increase his stop much larger, right? For the potential of making money. But even then, look at this. This trader that entered here with a stop here just did what? Won the 6RR on his trade. This trader barely hit 1-to-1, and if he has any higher system than that, he's now in drawdown, waiting and hoping. You see that? This is the really cool thing as well about stops and management. That's a good example of management. This guy that's entering has to put a stop here or here. This guy entering can put a stop here because of the price action. Who's going to make more money over time? Oh, we went over that. My bad. Need to go, bro. We'll watch the upload. See ya, peace, ball. Love you, buddy. Trader 2 doesn't get a trade, even if the market wants to dump. Trader 1 left would lose no matter what. Exactly. Right? And yeah, that's a good point. If you're entering here, right, more often than not, this trader won't even get a trade. More often than not, this price action will do this, right? And it just becomes a shit show. And this trader is either left holding the bag if he doesn't know how to use a stop, is left losing, and this trader doesn't even know that there was an opportunity because there was never an opportunity for him to take anything, right? There's so much to learn from moments like that. Just understanding how mechanically the market moves in regards to what is the psychology of the traders inside this market What does their psychology look like because of what's happening, right? Like, what do you think the trader that took a trade here, took a loss, right? What do you think he's doing when price coming up here? He's not entering new trades. He's scared, or he's doubling up on the opposite side. I showed you guys this on the higher time from a second ago. Whereas I'm finally seeing, oh, there's an opportunity now. Same price, but these are the opportunities. Where's my stop? Here or here, based on the trade I take. Look at the difference. No matter what this guy did, even if his stop was like here, he just did 1 to 2 on his account, on his risk just for that trade, and this has the opportunity of running, 50, 20, whatever the fuck crazy numbers of RR based on your management. Peace pod, your message didn't work. DMAs also help wait for them to catch up. Yeah. That's like a very easy rule on the higher time frame or the validation time frame. If the DMAs are far away from price or price far away from the DMAs, boom, you don't look. Easy, right? So like almost like if you want to do it like bad, 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 good, bad, 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 good, bad, bad, good, good, bad, 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 good. Bad, 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 good. Good, bad, good, failure. Right? Like, you can literally use that as a simple rule to change where you even step down or if it's even worth the step down. Mitchell says, light bulb moment to sit on your hands and stick to your rules. Yeah, very important. Tonu says, you lose blood flow on your hands then? How do you place a trade, Mitch? Okay, interesting. Shizen says, if you are impatient, you need to have a solid break-even rule. Get break-even at the right time prevents a lot of losses until you learn to be more patient, at least for me. Yeah, that's also very good. SJ says, EU is not good right now. Maybe in a month if daily becomes a bit cleaner. I agree. EU's been butt ugly for a while. Probably not. It's going to probably stay ugly for a few more months. Let all the weekends get taken out, right? That's what happens. In markets like that, where there's a lot of just back and forth, no decision, no clear surfers, no clear direction. All that's happening is traders are trying to predict the next move. Up, down, fucking anywhere it can. Any support level, any resistance, any buyout, any break and buy, whatever, everything. Back and forth. And that allows smart money, which they're doing right now, to accumulate proper positions to the upside or the downside. We, me, you, whatever, all of us, we're waiting for that moment to show us, okay, there's a market in play here. Let's go ahead and trade it now. Everyone else is just at the moment, kind of fueling the fire in my book, right? That fire is being fueled. Unless you're fundamentally driven, multi-hundred-millionaire base trader that understands that you're getting involved for the purpose of getting a good price, there I don't see a reason to trade like a bad market. Will you come out with new content for the remastered portion? Do you use a remastered SND in your own trading? I do not. Well, I kind of do. If so, which one do you prefer the most? Type 1, 2, all the types are the same because it's fractal. So theoretically, like I just said, I do use it, but not from the standpoint of looking for that like demand validation. I look for demand validation through the lens of MBs, of models, accumulation, distribution, multi-time frame. iPhone says, when stage 1 is happening, when is the earliest point to look for entries? Do we need to wait for the money to come in and reset first? What is your testing shown is going to be question 1. But it depends. It depends on the rules. It depends on the higher time frame. It depends on what the tools that you're using, like an MA, is doing on those time frames and that higher time frame. It depends on what your trades, your recorded trades, the photos that you've hopefully taken. What are those telling you about where those trades are and what they look like? I know when I go to any market at the moment, the trades that are going to be good are almost always going to be, let's say even on a 5-hour, just coming out of this kind of range here, right? So I know that's almost always going to be where my stage 2 exists. Right? Almost always just coming out and just starting to surf to go higher, right? It's always going to be like the same kind of thing. So if I go to any market, like let's go to a 5-hour. Let me show you. Okay. Okay. So like I know that on this day, after this day, or this day, there's going to be opportunity for the next few days potentially, right? And then it comes down to the 30-minute to say, okay, has anything entered that kind of moment for me yet? And that moment would be anywhere probably past this point. Yeah, same point. So on the 30-minute, as accumulation enters, because look, you have back and forth into a huge move up. That's accumulation into, here we are, into this sideways right at the rising MAs. I know that basically beyond this point here or higher, you're going to get your stage 2, something along these lines. Those are the moments that I'm going to look for my trades. That's it. That's really all that's happening, right? And then take a look what happens, right? There's your trade. It's like, it's just the same thing on repeat, right? That's my trade. Boom, there it is. I break even on this candle. It doesn't break even for me. I keep going, and then you have a recorded RR that goes, high. But again, it's all in the same moment of like, what is the moment I'm looking for price to expand? I know what I'm looking for there to be what I believe a stage 2 present, right? I know this is starting a stage 2 or is going to start one. I know what my 5 hours should look like when it's starting. And that's it. I just do that on repeat and I look for those moments. Otherwise, there's no trade, right? Yeah. The case says, after a long backtest in live trading, I finished with the easiest system I made. Here are 2 trades which showed the system. Here, the equity curve of the backtest on the Q4 2023 based on maximizing experience over 1,000 trades. Do you have the equity curve for me, bro? Oh, you have it. Nice. Yeah, exactly. Yeah. And I mean, you wrote them out here. That's really nice of you, but I'm not going to go over the rules right now of your system. Yeah, there we go. Can you do an outlook on FDAX and soybeans? I think they look clean for the next few days on lower time frame. Okay, so let's take a look. So you want lower time frame, soybean futures. So I'm going to assume, well, as I look at it on a 1 minute, I would not even touch it, right? So if you're 1 minute lower time frame, I wouldn't touch it. 5 minute is bearish. I mean, are you looking at it as a bullish move? Okay, no, you're definitely looking for something bearish for sure. Otherwise, you're just trolling, right? So maybe 5 minute is your like lower time frame. So let's assume it is. So we want to go through I'm going to flip it now. So we're flipping it because I'm just used to the flip version. Okay, so we're going to go through the things, right? What's the 30-minute telling you about this price? This is when you almost instantly see it, but your opportunities were like here, and now maybe after some time, again, here. But right now, again, the question instantly becomes, why weren't these points traded? These are the entries, right? These are the good trades. Let's go up a little bit higher, like a 5 hour, because I think that's like times 60 of the 5 minute, right? Again, like you almost enter the exact same question, right? Are you seeing this? Why is this where you're not looking for a trade? You are way too late. Nope. Lower time frame, I would not follow this at all anymore, right? You're looking for a trade right now here. You're looking for a trade right here. You're looking for a trade here. Why are you doing that? You are late in all these moments, and now you're just doing the same thing here. The moments for a trade were here. Okay? Right now, this is beyond late. Here. These were all opportunities for potential watchers. This needs to now reset. This needs to pull back. This needs to create new accumulation. Distribution. There you go. This is where you either flush out, which is like unlikely, but it can happen, or the likelihood of this price action is sideways. Right? Let's go to FDAX. So again, you want low time frame on it. It's not flipped. Okay, we're good. So 5 minute probably. Let's take a look if we're, first of all, like somewhat liquid. Okay, we look somewhat liquid. That's good. Okay, so let's do it again. We can start around the 5 hour. Just take a look at this. Yeah, so you had those beautiful moves higher, reaccumulated, beautiful accumulation, played around. Again, like, yeah, actually it's okay, but these were the moments on the 5 hour to start watching. Then it makes its move. So right now it could be okay still. You could definitely see a move out of this. So FDAX is already almost like 20 times better than soybeans. That's number one, right? 30-minute is within very clear accumulation, had beautiful opportunities, reset. It's actually, yeah, it's setting up for a very nice potential stage two. Exactly, right? So this is now lining up across the board with the models, with the movement, and with the way that price is moving with the MA. So now, right, what you're looking for, well, it's not a trade yet, but it's likely going to set up this Monday or something, right? You now want to see basically a version of, you'd want to see a version of like this happen right here, but happen over here. That's it, right? Come up, and then ICI it higher. Done. And you have a good trade. You have a good market. You have a good move. So yeah, FDAX a lot better. Soybeans, ugly. I would not touch it. Do you use the same BE rules for FX pairs? Yeah, of course. Any system that I create is always going to translate across everything. It's just right now, like on the FX pairs, I haven't seen anything lately, and I was offline or off the charts mostly for the week. But also, not a lot of stuff has been setting up there. So our 921 for stocks, I use it the same for everything. So all the testing I've been doing so far is with these. Those are the ones I'm trying to get my brain to properly subconsciously start to watch. But yeah, yeah. For the guy that asked, this is looking good. This can definitely make a move, and this can give you setups this upcoming week. So like this is something that I could have on my list, no problem at all. And then of course you can on top of that put together the context of it too. So like context here is really good. It might be considered a little bit extended on the daily, but that's okay because right when you're trading a 5-minute, you're so far disconnected that you can very likely get a break even or even no trade at all before the daily snaps back, or you can even get a good win before the daily snaps back. So nothing's out of proportion here. Like if the daily was here based on a market like this, I would ignore it. But right now, it had time to reaccumulate. This can easily, there's nothing stopping it from making another push like that, right? There's nothing stopping it. So easily can definitely have a setup on this week. Yeah. Just, I'd keep my eyes on it for sure. If it rolls over though and falls off, then, easy to walk away. But look how similar this looks to all those other moments we were talking about earlier today. Trader 1, losing. Trader 2, starting to wait for a move. Might get into it a little bit higher, but that move's going to pay off, right? You can see the footprint of the same thing happening. I hope you guys see that as I look at this. There's nothing new here. Why is MT4 not good for stocks trading? Because there are no stocks that are properly offered on MT4, MT5, I think anywhere. The only thing you have offered through MetaTrader usually is CFDs of stocks, not the actual stock. So you're not buying the actual stock, which means that you're already getting poorer slippage, poorer commission, and poorer entries. Because you're trading a much more illiquid market. It's not the actual stock. Stocks are almost always going to be through any broker, and most brokers do not have MetaTrader. That's it. That's really all it comes down to. What broker do you use for stocks? How much are the commissions usually? I believe I have 0 commissions because I'm on Thinkorswim, TD Ameritrade. I think it's 0 commissions. But you get like minor slippage and stuff because they sell the order flow or something. Shizen says, connected to the previews message, since I'm a bit impatient, I introduced stricter break-even rules for myself. Still early to judge, but you can see that break-even avoids many losses. Yeah, like that's insane, right? Think about this. Holy shit, that's amazing. 150 trades, a third of them are break-evens, right? This is so beautiful. And look at this. Yeah, this is great, dude. This is great. Good shit, Shizen. Keep it up. Samuel says, what do you think about the Bloomberg terminal thing? I have a friend who has a friend who uses it as well. You can imagine how many great comments they have for it. And about comments for the retail. I don't care. They can do whatever that works for them, dude. Shizen's coming to Disneyland with those break-evens. Yeah, bro. Would you wait for an FMB break on an entry time frame too after an FMB break on the mid time frame? Rules. Up to you. I don't. See y'all 6:30 p.m. here. Kids are getting hungry. Have fun with your kids, man. I'll see you. Hey, boss, I gotta go. No problem, man. I'll see you. I found that you can usually wait longer than you think when considering entering a trade. 100% agreed with that. Yep. Almost always, like, just waiting a little bit longer makes the setup better. You get more used to that, and it just gets better and better. Anton, one more question. In the system number 3 video where you traded 15 second, I noticed that you often take trades in what looks like a stage 1. I recognize a stage 1, but usually want to wait for money to come in more clearly. Is that too late? Depends on when you're looking at it, right? It just depends. Like, I just went over a few examples of stage 1, stage 2, stage 1, stage 2, and how I'm viewing it. So, yeah. When you wait for money, or like I would take your question and throw it back at you and say, okay, so John, when you wait for money to come in more clearly, which is what it seems that you're doing right now, have you noticed from your testing that it ends up in profitable delivering trades, or are you getting chopped out and you're too late to those trades, right? And then when you answer that question, you can then take the next course, which is, okay, given that, should I be having faster break-even rules because some of my trades do run a lot and it's really nice and they never come back? Or should I start looking for ways to enter lower inside of that initial range? And what are the tools by which I could do that to still not get chopped out completely during a longer term stage 1, right? You want to, like, I'm literally going to take that question, throw it back at you, because like this is going to be so dependent on a lot of the testing you're doing, because again, for you, what you constitute as a stage 1, stage 2 specifically in this moment could be very different from what I might constitute it when I'm looking for a trade, right? When I'm taking a trade, where is it? Let's go back to GC here, because that's been an easy example so far. When I'm taking a trade right here, is that constituting in your mind stage 1 or stage 2? Because I don't know, because for me, the stage 1, yes, this is a version of a stage 1, but also due to the MAs, I'm seeing this is a stage 1 and this is already the start of a stage 2. So I'm getting involved in a stage 2 for the stage 2 of a 1 minute, which is going to be the stage 2 of a higher time frame, right? So for me, it's not late at all. But for you, you might be like, oh, it doesn't make any sense. Because again, what constitutes that stage 1, stage 2 might be very, very different, okay? Right, when I look at my Bitcoin here, and I'm taking that trade, where's my GBTC trade that I'm in right now, right? When I'm taking this trade, I don't constitute this as a stage 1. I constitute this as clearly stage 2, because the stage 1 was here. Yeah, we're in shorter term stage 1 now, of course, and I'm entering into the assumption that we're stage 2 is starting, right? But again, you might not see it that way. So it's very important to, again, do the collection. And I'm throwing this, oh yeah, I'm literally throwing this question right back at you, because I mean, this question is answered almost by yourself. Right, so like, yeah, again, like stage 1, stage 2 starts, I'm looking for a trade, right? And you want to see more. So again, that's completely up to you. Sorry, it was meant talking to me. I was talking to you, bro. But it's okay. It's okay. We got the point across. That's what matters, right? Why 921 instead of 2050? I like that it's faster. I like that it provides potentially more opportunity. I like how it lines up for my stage 1, stage 2s. It just, for some reason, it feels easier. So I use that. And the testing of it has shown just as much. With the 920, sometimes they'd separate in such a way that I'd have to kind of, it was a little bit more guessworky, so I'd have to wait for very specific rules to be met. Now it makes it even easier for me to spot those rules. That's it. I'm testing BE rules when I have one candle open and close above the entry. It's a nice one. I know very fast this is a good ICI. Yeah, exactly. A lot of losses prevented. Good, good. Need a hoodie that says it's the same thing on repeat. Yeah, literally. Seems like most of your examples are longs. Is this mostly what you look for? Yeah, but here you go. Here's shorts. Nice. This man looks like you. Thank you, bro. Thank you. Entries on like 5 minutes. It's weird, but okay, 5 minute. Higher time frame did not break the FMB. I'm not always looking for that. Again, those were rules to create patience in people that are kind of unable to validate a move and just want to just get in on anything. It's one way to do that, right? Should I watch the, yeah, see, he sent that. Imagine a bullish ICI setup. Okay, here's a bullish ICI setup. With 2050. 2050. You might tolerate one gently downward sloping MA.
if the other one is upward sloping. Or two sideways MA if the move is clear and they can start sloping. But with MA 920, is there any room for disagreement? They're much faster, so you don't want them to be upward slope. You'd want them both to be upward sloping, no exceptions. Yeah, pretty much. Almost always. Because I'm looking for much faster base entries. By the time it pulls back to a 20, if it does, it's too late. Like at this point, I'm not even looking for anything until it resets and then it's good again. Sorry, one question. What MA setting should we use? It's completely preference. Here are mine though, at the moment. The ones I've used in my life is this one and this one. Okay. Those are two I've used so far. Lots of -1 because the break-even rule was introduced from 111th trade. So Alex, I would 100% go back and not mix and merge. So 111, which is here, 111, 111. This is where you changed some form of rules. This should be its own equity curve. These two are not responsible for each other. You have to be aware of that. This is a different rule set than this one. They might be both profitable, but you cannot continue off of this point. This should retain the rules of this one. Okay, it's like, dude, it's like if I took this, it's like if I took this one right now and slapped it on top of my last 7-month performance, right? It would make no sense. It would just be like completely, it would be, because it's two completely different systems, right? You can't do that. You need to make sure they're individually profitable. Then you can put them together after. Can you use Thinkorswim in EU? No idea. US only? I guess not. IBKR? No, IBKR I think is good. They're good. If they have MetaTrader, you can use them, but they're good. I'll draw back with results to 111. Okay, good. Yeah, do that. So yeah, guys, if you guys, again, today was more of like just a catching up, going through some of the questions you guys had, walking you through kind of how I'm looking at prices, thinking about prices, showing you guys an example of what I call a very good trade. If you guys want me to look at anything, I can take a look right now. But this was just something I really wanted to bring up because this was the example, right? So he asked me about it. That's why he even posted it. He's like, "Oh, look, what do you think about these?" And I was like, "Yeah, these are phenomenal. Like these are okay. I like the ones that are a little bit higher up." But I even said it. I said these are beautiful. I take any of these now with my current testing, right? Any of these. And again, the reasons for them, and I kind of showed him firsthand, is because look at where it exists. Look at what the market's telling you at that point, right? Look at what the market's telling you at that point and where it was. So those are phenomenal entries. So that's what I was looking for, right? Oh, I didn't see him ask. I didn't see this guy ask this until just now. Yeah, this, if he traded inside of this, it looks like he did, then there's probably a really nice trade inside of there. I would throw on the 921 though, because it'd be easier for me. But yeah, this looks like it would be a setup almost for every reason. So yeah, this looks good. This one might be a little late, but it's okay. I think this one's really clean. This one looks like it would be clean across, most of those. Upload in the next hours. I need to rewatch today's webinar, Mr. First. I got you, bro. I'll get it up there soon. What is the strongest JPY pair right now? I don't know. Let's find out. Yeah, so this thing's just been delivering nicely. Like, so last week, if any of you traded like the XXX JPYs or like the GJs, like if you took any trades anywhere inside of here, or even a little bit higher, you did a really good job. This is what I would be doing as a trader. Like this is perfect. Yeah, just really nice. And then you can see probably any 5 minutes around here, 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 all potentially really good trades, right? So if any of you traded this during the week, like 5 minute, whatever, 15 minute, maybe even, yeah, this had some crazy nice opportunities. Beautiful, it's just beautiful. Yeah. Beautiful. Perfect. Absolutely perfect. Right now, let's see. I'm gonna look at it from the perspective of 5 minute based kind of. So kind of those kind of moments. Right now, you're talking about probably waiting a little bit. It's definitely in the moment where it could set up. You can take a look at a 30. Yeah, so like 30, I'd let this come up a little bit, go sideways, and then you could follow it through. So GJ looks somewhat good, which is probably gonna yeah. So CJGPY a lot uglier, right? All the way down here, faded heavily. Nothing to really do there. You can like throw that down. NZDJPY, yeah, this one's just been clean like for a while, right? Yeah, I mean 5 hour on the NZDJPY looks really nice. In accumulation, moving higher, right? UJ did it make it through the high? Oh, not yet. Still make yeah. So five. So even UJ looks really good too. Yeah. 30 minute. Oh, longer. Very longer term range. You guys know I don't like the super long term ranges, but yeah, huge range on this. So you just probably weaker, just because of that. Yeah, weak and fading. Somewhat strong. So it looks like NZDJPY and GJ are like the best watchers right now for the XXXJPY pairs. I mean, that can easily change, but they're definitely the best at the moment. If anything, like NZDJPY at the moment is the best of the best. But GJ has clearer moves. No, not. Yeah, it kind of does. Yeah, I've watched one of these. They're pretty good. EJ? Is it not on there? Oh, it's not. It looks like these guys here. Not that good. ETH USD, probably like Bitcoin, right? Same thing as always. Um, almost always same thing. Yeah, I mean your opportunities were definitely inside of here or here, somewhere inside of there. Started moving along. Maybe at a very late stage, some opportunities in here. Yeah, you had one right here, and I think now you have to sideline it. But higher time frame. Yeah, I mean this thing just like Bitcoin, right? It's just been delivering long. Um, yeah, it looks like the same. Yeah, I mean it's long. It's definitely long. It's like it just follow it in the form of crypto. It's exactly the same. US 100. Um, what's US 100 been up to? Yeah, US 100's been really nice too for sure. US 100's remained bullish. It was in reaccumulation, but on the downside, started coming up. Yeah, this week it can definitely start having some follow through for sure. No reason it can't. In reaccumulation on the 30 minute, yeah, we're looking good. If this can set up, if this can fade like slowly, open up, fade slowly, and then come up, you're gonna get some nice opportunity around these prices here to keep going. And you can see like it's the same thing on repeat. It's kind of crazy. Like you guys should all see this as I look at it, and then again, this no the new short sellers are all entering here if this happens, and then your trade is beautiful. Yeah, corn looks illiquid. Yeah, I wouldn't touch it on a lower time frame, so that means you're probably trading like a 4 hour or higher. Looks I can already tell it's probably going to be extremely extended. Again, this is where the question comes: why didn't you trade it here? Why didn't you trade it here? Why didn't you trade it here? Why are you looking here? You're way too late. There's nothing to look at this on now. Yeah, I mean this is where the move came from. These are the entries to get involved. Now there's nothing to do. No reason to be watching that. Yeah, a lot of back and forth into distribution, into potential redistribution that doesn't even break the high. So you're looking at a little bit of a 50-50 there. Let's look at a lower time from first. Is it illiquid or is it tradable? It's relatively illiquid. maybe tradable on a 5 minute. It's okay. It's not terrible, but it's not the best. So you're probably not trading this on a lower time frame. So you're probably trading this on a 4 hour or higher. And yeah, this needs time to set up. Or if it comes up, go sideways, you can get a long off this. Does the daily line up with that? I just take a look at the weekly too while we're at it then. Yeah, honestly, it's not bad. So higher time frame, 4 hour wise, you might get a trade on this week for sure. I thought, what broker do you use for your FX trading? IG. I have a little bit in IG, and I use Thinkorswim as well. They have FX trading as well. So, can you do a look at on Jur 30? I looked at FDEX, so whatever I said on that, but I don't think it's clear right now for a good move. I think it's extended. EJ GU, just like all the other XXX USD pairs. Yep. It's remained shit as it was for a while now. As expected. This is called I want to lose money right now. Please help me lose money market. That's really all it is. I mean, there's nothing. I don't think there's anything to touch here. This thing is hard stuck. Yeah, like you can see there's ICIs that work, like good ones that work. But again, it's just a market that I wouldn't want to personally trade. USD CAD. A lot of sideways. Not necessarily moving in a clean way here. Back and forth right now. Back and forth. I wouldn't touch it. Nope. AVAX. Accumulation begins. Nice flush out. Opportunity in here. And now you're waiting. Yep, this can set up though. It needs time. Maybe a week or 2 weeks. And then you'll get trades here around the 38 level to probably make its way to around 44, 43, 44, 43, and then all-time highs. Yeah, there's nothing here yet, though. GU's choppy in general on all time frames. Yeah, it's really easy to see it. And I always do it, and you guys should do it too. Oh, well, actually, it's starting to roll over to the long side, it looks like, with the model thing. But the daily still, I mean, daily just started coming upwards here. If you give it some time, there definitely could be longs on this, but right now, I don't think so. Yeah, right now I don't like it. But yeah, if anything, longs are definitely the next available thing on these markets, like GU, Euro USD. Yeah, you're just waiting for these things to start moving long, clearly. Right now, they're not clear. They're tradable, but they're not clear. So I'm just going to wait for like when those become clear. And I'm also interested, like, as these are starting to show, because like as I'm looking at all these XXX USD pairs, I'm honestly starting to see characteristics of bullishness just in terms of the way they've moved. It's not ready, but characteristics. I wonder what the retail thing looks like right now. Does anyone have it? A little image? I mean, it's still like 50-50. Like I'm not trading them, but it looks like they're being accumulated for sure. For sure, they're being accumulated. FTM USD as a 4-hour entry. Let's see. So 4-hour entry means you're kind of looking at the daily or higher. Yeah. Starts accumulation, clear reaccumulation, starts getting caught up and bought up, still being bought up on the higher rising. Definitely. Yeah. This is great. Let's take a look at the weekly really quick, make sure it's all in order. Yeah, so longer term range, no problem with that. That's okay. You know, kind of started expanding, faded slowly, getting bought up and bought up again. Yeah, dude.
This is a good spot. This is definitely a good eye. Oh, it's ready. This guy's ready. If it can yeah, I like it. Yeah, it's good. If this can it's not a signal, boys, but if this can just come up and grab this, you're gonna have almost a guaranteed break even on this into potential delivery for sure. Yeah, whoever just said FTM, that was a good spot. SFT, good job, dude. Yeah, this is a great contextually sound market. If it doesn't set up there, it can set up later this week. Oh, you got the EU shot? Yeah, okay, this also makes sense as you can see. So yeah, as you're seeing the market kind of go into this accumulation, you can see a lot of people are starting to sell it hard. Soon this number's going to get to here, and then you're going to get a very nice bullish market on the XXX USD pairs. Right now they're not ready, but I'm telling you, this is starting to look a lot like it's being accumulated. It's almost there. Like it might need just a little bit more of back and forth into then delivery, or it'll start, come down, and then around here. So probably in about, what is this, like about maybe 2, 3, probably 3, 4 months, you're gonna see EU. Yeah, there you go. That's GU. You're gonna see EU get to like 70%, 80% short, and then we're gonna start an actual run. And that's when I'll probably be watching it again for trades. Yep, exactly. This is looking really good. Yeah, this is things are lining up. But yeah, it looks like it wants to go accumulation, but it's not ready yet. Give it some time. 3 months, 3, 4 months, and I think we should be good on that front. But yeah, the guy that said FTM, it's a good one, dude. It's a good spot for sure. There's a good eye on that. It was a good eye. Um, yeah, yeah. I like it. I like it. And you can almost like see it. You can almost see Trader 1, Trader 2, right? Like I hope you're all seeing this. Like there's nothing crazy here, but even from just today's discussion, if you just look at today's like educational webinar or whatever you want to call it, the webinar is an educational bit, and you look at it from this patient's standpoint and how liquidity is built up and how weak money gets shaken out, and then when a market actually gets ready to set up, how it looks and where it looks. I hope you're all seeing this. Like that the market repeats itself on repeat. It repeats itself on repeat. It does the same thing over and over again. Like go to any time that there was like a real bullish run. Look at this, right? This is the same thing, right? Think about this. He's looking at the price right now, right here, right? That's what's happening right here. He's looking at the price. Again, you can just move this down if you want. He's looking at the price right here, right? Like if you get used to finding these kind of moments, you start understanding how prices deliver, and then all of a sudden it becomes really easy to capture these kind of moves or to be involved in these kind of moves. That's how it's done. So yeah, really good spot there. Good job there with that. This can definitely set up this week. So yeah, you got a few XSX JPY pairs, specifically GJ and ZJPY that are okay. US 100 is setting up and can definitely give some kind of opportunity this week as well. Bitcoin continues to just be rampant and beautiful. If you give it a little bit of time to go sideways, it can definitely set up for new longs. Otherwise, I'm just managing my longs on this right now. You got some independent coins, cryptos, because of the fact that Bitcoin is like this and delivering bullish, that are going to be really clean. So a lot of those independent cryptos like FTM, like SFT said, is good. And then, of course, during the week, you always have independent stocks that are just setting up, making moves, which is why I've been watching them a lot. You can see like these are just from a few days, but they get into a context, and then that context wants to deliver. I mean, like this one's not anything good, but like this one is likely going to have a good follow through this week again. Yeah, if it stops being so illiquid and opens up nicely, this is going to set up more opportunities again this week. So that's good to see. I always like that. There's nothing wrong. Oh, someone said nifty. So again, I don't know what time frame you're trading since we haven't spoken about that, but that's fine. Yeah, so there we go. Last week, I think I spoke about how let this go sideways for a bit, as it did, and then it should deliver bullish, and it has, and it's continuing to be bullish, and it's in bullishness. So, not much to do but be bullish on this thing, right? Yeah, this week, literally right now, it's setting up okay for a 4 hour buy stop right here. If it opens up, comes down a little bit, it should make a little move. There's no reason it can't. If you're trading a lower time frame, um, yeah, this had a beautiful setup around here. Accumulation is definitely present just due to this move. Reaccumulation, it's got a little bit choppy here. That's okay. If it opens up and based on how it moves, you might even get a trade around here. And again, think back to what I just said, right? Yeah. Yeah, you can. Yeah, nifty longs look good. It makes sense. It lines up like it lines up with the other indice. So indices when they're hot, they're gonna probably be hot across the board, and they are. So there you are. It was actually very educational. I'm glad. DYDUSD DYDX USD. If it's not on Coinbase, I'm not looking at it. By the way, it's not on Coinbase. I don't trust it. Looks ugly. Higher time frames. No, it's ugly. It needs time and a lot of it. I don't like it. I don't like it. When trading a 1 minute, 5 minute, 30 minute system and they all have good context, in your experience, can the higher time frame 2 hour plus have visible effect on your lower time frame systems? Well, I would probably go 1 5 1 hour. And in that case, somewhat. It's just up to you, really. Because, like, again, 1 5 30 minute or 1 hour, the 2 hour is not far off. 4 hour might be a little bit far, right? Daily's definitely far. But you can just take photos of them and keep in mind where they are. You might find that when the daily is like this, that it doesn't even matter if these are all clean, it just doesn't end up holding up well. But yeah. Models on the SPX higher time frame kill me. I mean, it looks good. It's had really good moves and follow through for sure. This has been really clean. Yeah, like if you're like a basic investor that just wants to trade SPX and get in when it's good, like now you're waiting. I mean, yeah, this thing's been kind of just running up. Lower time frame has a lot of gaps. Harder to trade, but yeah. Gotta go, guys. Have a great day. I'll see you, man. I mean, it does 4 MBs up and then 4 MBs down. I don't even know what model that is. Depends on how it looks on price. It can also just be non-existent, just like not clear. But if the price is like 4 MBs up, 4 MBs down, well, if it looks like this, what is that? Section 1. That's institutional structure that wants to move long, so it becomes a reaccumulation. If the 4 MBs down are like this, now you have distribution or reaccumulation, but it's ugly. Because, yeah, this could be an absorption. Yes, it could be I don't even know, right? So then it becomes harder to follow. Yeah, that's right, Alex. That's right. If you are asking that question, then it's a stay out of the market moment. Yep. Exactly. Exactly. All right, let's see. We're about 2 hours, 20 minutes in. I think it's a good place to let you guys go off, enjoy your Sundays, and get the week started correctly. Listen, guys, thank you all so much for tuning in, for showing up to the webinar. Appreciate you all a ton for being here, of course, for asking your questions, for interacting with the community. And I look forward, as always, to seeing everybody in the trade talks. Continue getting better, continue growing, keep tagging, keep putting in value, keep adding value. Listen, guys, thank you all so much, okay? You guys are amazing. I'll see you all in the trade talks.
All right, boys. Have an amazing week. Let's do it. Bye. Mwah. Peace, guys.